Today I'm going to show you some of the most lucrative option selling strategies that I have ever used. And I see absolutely nobody talking about this. Ladies and gentlemen, buckle up. This strategy, I believe, is going to ultimately earn me about $5,000 per month. First of all, the goal is to be able to earn a full-time passive income by using a combination of strategies that will maximize our monthly income with a small account. The secondary goal is to be able to spend less than 5 hours per week selling options. Now, the key to this strategy, what makes this so unique over other option selling strategies out there, is what we're actually selling the options on. So you want to sell options on things that are really volatile. Historically, people sell options on things like Apple or Tesla, Netflix, those sort of volatile stocks. In this strategy, I'm selling options on cryptocurrency because cryptocurrency like Bitcoin and Ethereum tend to be more volatile than just about any stock in the stock market. Just in the past month or two, we've seen Bitcoin go from like 73, 74,000 all the way down to 72,000. And now we're going back up. We're sitting here at 68,000. As you can see, there's a lot of volatility here. And that volatility is why we're able to make so much income selling options when other strategies aren't quite as profitable. I'll just put it that way. This is the website that I personally use to be able to sell options. Now, I'm not recommending that you follow my strategy, but this is a strategy that I'm using. Everybody needs to use their own, risk tolerance, if you will, and kind of evaluate things on their own. If you've never traded options before, I do encourage you to go in very slowly. So just take it one step at a time till you kind of get the hang of it. It can be intimidating. It was for me initially, but once you get the hang of it, you realize this is incredible. You don't have to worry about trying to guess the direction of the market. You don't have to worry about what meme coin is going to pop off. You don't have to worry about which NFT is everybody buying. You don't have to worry about the Bitcoin ETF is going to cause the market to pump or dump. You just don't worry about all that, market directional noise nonsense. And I'll show you exactly why as we get into these strategies. So strategy number 2 is we only sell options. Now, if you've looked at options before, you hear people buying options. And they'll buy an option for $50 and they'll talk about how they turned it into $500. But what they don't tell you is they probably lost the first 10 trades before they had that one trade that did well. Most people do lose money buying options. The advantages to selling options is we're able to produce a much more consistent income from week to week, month to month. I don't have to worry about the direction of the market. I just touched on that a little bit. And it's easier to turn a losing trade into a winner. So there's a method that I use, a specific strategy to be able to adjust a trade if for some reason that trade is working against me. Now, strategy number 3, I target options that are 1 week out from expiration date. What's important to understand is when you sell options, let's come over here. Let's take a look right here. If you sell options, if you go 1 week out, right now it's the 4th, so let's just say we'd be looking at options on the 12th. There's something called theta decay, time decay. The closer you get to the 12th, the faster that option price decays. Now, this is important because when you sell an option, what happens, for example, if I was to come here for some reason and I was going to go to put options and I was going to sell this put right here. If I sell this, I'm going to get $25. I'm going to tie up about $443 in capital. You heard that right, by the way. If you've ever tried to sell options on traditional stocks, you might make 1% in some cases on a trade. I'm talking about tying up $440 and making 5.5% on that one trade. Now, what happens is as time passes, this option, if the price doesn't move and time passes, meaning the price doesn't have to move at all, we still make money. It'll go to 24, 25, 26. It'll get cheaper and cheaper and cheaper all the way till once at April 12th, it will be worth $0 essentially. And the option will expire, free up my buying power. There's probably one more thing that I should point out here. If you're new to this, you'll see portfolio value. That's the current value if I was to close out all my trades right now. However, my collateral is $9,755. This is the number that I pay attention to. In fact, right now, statistically, every single one of these are going to expire in my favor. If for some reason the market gets extreme and it has to move to extreme levels to threaten any of my positions, but if it does, then I'm always paying attention. If I lose any of my collateral, then I want to get it back, and I'm going to show you how a little bit later in the video. Let me just recap here. Strategy 1, look for the most volatile assets we can trade. Strategy number 2, we only sell options. Strategy number 3, we target options that are 1 week out from expiration. These options lose value very fast to theta decay. Theta decay, the rate at which an option loses value as time passes. Meaning if you sell an option for 40 bucks, you want to keep that full 40 bucks. You want the price to get to zero as quickly as possible. And the price goes down exponentially faster in that last 7 to 10 days. That's my sweet spot personally. Strategy number 4, choose options with a delta of 0.15 to minimize risk. Delta is how much an option's price can be expected to move for every $1 change in the price of the underlying stock or crypto. So if we sell an option, delta of 0.14 means that the option's price will theoretically move 40 cents for every $1 change in the price of the underlying stock or index, or in this case, for the underlying crypto. This is the most important thing for me. The inverse of delta gives you the probability of success on the trade. So that means that if a delta is 0.15, that trade gives us 85% chance of success. If the delta is 0.10, I don't necessarily care that means for every dollar change is a 10 cent move. What I care about is that means I have a 90% chance of success on that trade, meaning that I have a 90% chance that when the expiration date gets here, that option will be worthless. Now, if the price moves against our option, the delta can change and it will go up. So strategy number 5 is monitor your options delta till expiration. That's what I care about more than anything else. What is the actual delta? If the option delta goes to 0.3, that's my strategy personally. That's what I do. I adjust the trades. If I can close the trade before the delta gets too high, then usually I can turn that trade into a winner. So how do you adjust the trade? By the way, the reason you want to adjust the trade is because the goal is to defend your profit. You want to close the current option, take note of the amount of collateral that you lose. You want to sell a new option to recoup the collateral that you lost, and sell options up to 0.2 delta. Go out 14 to 21 days. Sometimes you'll have to go out further on further time frames. When I am trying to adjust the trade to defend the profit, I always want to sell a call option and a put option on each side of the current price. What would happen in that example, say you came here and you're like, okay, I would close out this trade. If I was to close out this trade, I'm going to end up taking a loss. Let's just say that the loss ends up being whatever it is, $40. Then what I would want to do is I would come back here. I would go out, start at April 19th. I would want to go on both sides, the put side below the price, the call side above the price. I would come to the put side and I would be willing to go out to 0.2, and I want to get my $40 back. Now in this case, I could get $50, but I would prefer to make it a little bit safer. I could, right here in this case, I could go out to 0.11 and I could get $28 back, or $25, $24 after fees, whatever it is. I could get that back. So I would sell that, let's just say it's $25, and then I would go to calls and I would look for a call to sell. Okay, I can sell this one. And in that case, I'm going to make $28. So I'm going to make more than my $40. I'll make my $40 plus a little bit more. Let's just say that I had a larger position. If this was going against me, let's just say I had, $1,900 here and I needed to get back $120. I got $2,000 and I got to get back $120. This is going south. And my delta, what I would do is I would come double check the delta. I literally check it manually. I just come here and say, okay.
Hey, this is Crypto Wealth. I'm editing this video and I wanted to kind of point something out to you really quickly here. If you're not familiar with options, it may not be clear. When I close out this trade here, if this was going against me, I'm gonna get back my buying power. Now I used $2,000 just to give us a round number, but what I would actually get back would be this number minus whatever I'm down. So if it was $120, I would get this buying power back added. You can't see it in here. It would come up here. You can't sell options if you don't have buying power available. So I would get this just under $2,000 added back to my buying power. That would allow me to sell more options. And then I would use that buying power that I have available to sell enough options to receive enough premium to cover the loss here. The hypothetical loss was $120. Now back to the video.
I don't like what this is. This is in the red. Let's just say it says I'm down 120% or something like that. I would come here and be like, okay, let me go check my delta on my 31 put for April 5th. So I come here, I go to April 5th, 3100 put. Now, of course, in this case, it's fine. But let's just say that I come and checked it and it says it's 0.25. It doesn't matter what it's losing. As long as the delta is above is below 0.3, I'm pretty good. If I'm getting ready to go to bed and I happen to know that a delta is at like 0.28, I might close that one out. I want to try to close it before the 0.3 if possible. So, and usually it's not a big deal. But let's just say this said it was 0.3. What I would do is I'm like, okay, I got $2,000, just using round numbers, when I close out that trade, and I need to make up, hypothetically, $120. So the first thing I would do is I'd come here and I'd say, okay, go out to April 19th, and let's just see what we have on puts. Well, I need to get back, what did I say, $120. This would give me 55, but I got $2,000 I can use. So I could sell 2 of these, and that's going to give me $110. And then what I might do is come over to the call side, and I might sell 1 of these right here, 0.16. Now, sometimes, for whatever reason, I've lost so much. Let's just say that I had $2,000 and I needed to make back, I don't know, $300. Well, I might come back then to the April 26th, and I'd say, okay, let's sell puts. Let's go over here. I don't want to get this high, 0.18. Whatever I told you I need to make back, $200. I can sell 2 of these, and that's going to give me about $130. 65 plus 65. And then I would come over here to the calls, and I'd say, okay, I can sell this one. That one was, what, 130? Further, well, I can sell 2 of these, $2,000 total. So I can sell 2 on this side, 2 on the other side, and that's going to give me my $200 back that I would have lost in that trade. Hopefully this is making sense to you. The way I got started was I went in, I think I had $5,000 I put in the very first time. I just sold 1 option, and I just watched it for a week and watched what happens. In the beginning, I stayed away from 1-day and 2-day options because they're way too volatile. The market moves 4 or 5%, and these things are in trouble, and that takes a lot of work. The sweet spot is when I'm opening trade. I want to be about 1 week out. Ideally, you want to be opening trades and let them expire every week. But on occasion, you're going to have to defend your profit and adjust the trade. And the way you adjust it is go out 14 days, sometimes 21 days. Further, if you have to, try to sell on both sides of the market at about 0.2. Strategy number 7 is don't get greedy. If your initial options are too close to the strike price, you'll spend too much time defending your profit and adjusting trades. What I mean by that is if you it's very easy to get greedy. Say you're selling puts. I'm going to be making $26, but I'm going to make a lot more if I sell this one for 0.22. What's the odds? I mean, I'm still almost at 80% success, but man, if I come here 68% success, that sounds good. Let me sell this one. That means you have a 1 in 3 chance of this trade going bad. And truthfully, you have about a 50-50 chance you're going to be in a position that you're going to have to defend this trade. Now, by the way, it's going to be much more difficult to defend the trade because your delta, you're starting at a 0.3 delta. When you start at a 0.15 or less, it gives you a lot more room to defend your trade. Also, that's another reason why you want to sell on the 1 week time frame, because you only can go out with Lyra, you can only go out this far. And they keep adding new dates all the time. This is a young protocol. Pay attention to how much we are earning. Sorry, I just got interrupted, so I had to restart the video. But right here, if we were going to trade, let's just say this option here, 0.15, we were going to trade that. It would tie up about $435 of our funds. That $435 is going to earn $25. If we were doing this on a traditional market, we'd be lucky to make $4 if we were trading something against, Apple or Tesla or Netflix. But with crypto, you're talking about earning 6% on your money, essentially. That's crazy. Even if you came down here to the 93% chance of success, only 7% chance of it not working. You're talking about still earning over 2% on your funds. That's if you're trying to play it super safe. That's 2% per week. The only way you lose money in this strategy, by the way, is if you have consecutive days that are, like 5% in one direction. That's really the only way you're going to lose money. And what will happen is you cannot recoup your collateral back. So what you do in that situation, by the way, is you just sort of cut your losses and start over. If I have a loss on a $10,000 account, my loss is probably about $300 to $400 in a month. You can make that up literally the next month. Out of a year, you may have 1 losing month, 2 losing months in the entire year. You may not have any, because all of your trades have a very high probability of success. And keep in mind, even if the trade starts to go against you, you're able to make adjustments. So as long as you're trading conservative, you're not getting greedy, you'll be okay. Let's get back here. We're talking about, in this example here, making 2% per week. That's 8% per month based on current option pricing. All my calculations, I base it off 6% per month. That means to be able to make $5,000 a month, you would need, what, $85,000, $86,000. Now, I get it. If you're a small minnow starting out, $86,000 in a crypto trading account can sound like a lot. All of us can start small and grow big. If you want to know exactly how quickly you can grow your account, if you start with a $5,000 account, a $1,000 or $10,000 account, subscribe to the channel because I'm going to do a whole separate video on that. If you want to know exactly what it would take for most people to make a living if they were trading options on Netflix or Tesla or Apple in the traditional market, most of the time you're probably going to need $500,000, $700,000 in an options trading account to be able to trade and make a full-time income. But with cryptocurrency, you don't even need $100,000. I'm telling you, crypto is incredible. Nobody knows that we're over here able to make this kind of income. If you want to see one of my other strategies where you can operate like a hedge fund, essentially following other traders with a successful track record, take a look at this video over here in the top right-hand corner. Remember, decentralized crypto equals freedom. This is Crypto Wealth. I'm out.